ISA Holdings is a small but high-margin company which provides network, internet and information security solutions. The company has a market cap of 133 million rand, a price-to-earnings ratio of 9.9 and a dividend yield of 10%. ISA's partners include Checkpoint, Bluecoat, F-Secure, RSI Security and Microsoft. I like that 10% dividend yield.
Yeah, look, this was the old Y3K, which was a bombed-out tech era listing. Y3K, as you can imagine, didn't go much better than Y2K, which was a damp squib.
I didn't even hear about Y3K.
Yeah, that's coming in 1,000 years' time. ISA then basically reversed into the company because the vendors, the people who owned and had started ISA, which stands for Information Security Architects, Clifford Katz, basically took over the listing, renamed it, and so on and so forth. So what they are now is kind of like a family-run business, but high margins, smart guys that do IT consulting. They control most of the shares, so they don't have to pay much attention to the minorities. But the dividend yield has been fantastic. They paid 10 cents or something a share last year. They're paying 7 cents this year. So they've got quite a high NAV. They've got 48% margins, as these consulting companies do. They went and bought themselves a 10 million rand building alongside the N1. So, you know, it's sort of up and down, does what it does.
In terms of the dividend yield at 10%, now obviously there are those out there in the camp that you should be accumulating into your portfolio good dividend payers. ISA meets the criteria on that front, of course.
Well, ISA, just having a cursory look, it seems that they pay out all the earnings in dividends, whereas other companies...
That's because they don't have any minorities. Yeah. They're taking all the money.
Well, you know, they're paying it out to themselves. So, so the fact that they're paying a very high dividend yield, it's incredibly important to see what their earnings going to be next year, because if they're paying 100% of their earnings, that's the number of the dividend. So, and with paying out all the earnings in dividends, there's obviously not a lot left.
What can you reinvest in your company is what you're saying.
But with a business like this, you don't really need capital to invest to make it grow.
It sounds like a good one to be CEO of.
Yeah, well, and I suppose in a way they listed it because it suited them to, and that was in about 2005 when they came to the market through the Y3K shell. So they wanted the status and the visibility that comes with listing. But they could make a decision next month that fundamentally transforms the business dynamics. They could do a huge transformative deal which, you know, evaporates all of the earnings. So really, I don't think you can bank on anything other than, you know, what it is that's going on there. So you would never buy them unless you went to a results presentation or did a company visit.
ISA, hot or not?
Well, I haven't done either, so then therefore definitely not hot.
And Jonathan?
It's not hot for me. It's just I don't see the growth, and I mean earnings already came back in the last 12 months.